as we continue to track developments around what is happening in the Middle East, we look at both the political and the economic implications of the conflict. Yesterday, as you've just heard, the International Relations Minister, Naledi Pandor, appeared in Parliament on the latest developments, as well as the decision to recall South Africa's ambassador to Israel, something she didn't really touch on there. But we have to ask the question, do market participants or investors watch events like this closely, and also watch how emerging economies like South Africa react to them? Well, Chief Investment Officer at Credo, Deon joins us to unpack that question and more. A very good morning to you, Deon, and thank you very much for joining us this morning. Let's start with that very question. When it comes to geopolitical events like the Russian invasion, as well as the latest developments in the Middle East now, are market participants and potential investors looking at the direction that emerging economies like South Africa's take?
Well, yes, thanks a lot for having me. And it's a pretty complex question in terms of all the various aspects of the market. So the short answer is yes. The market will always take note of these events and the response of different countries and different economies to it. Having said that, if you go and look at how markets typically behave in the days and weeks and sometimes months after the event, it's other news flow that takes over. It's the real economy. It's what happens, with inflation in the US and the implications of that on, for example, global interest rates. Those are the arguments that really matter much more. So in the short term, markets are always volatile and take note of news flow. But in the slightly longer term, it's back to fundamentals. And for the most part, those fundamentals are typically not affected that much by events, even as tragic and as dramatic as those that we've seen playing out in the Middle East over the last month or so.
And when we do talk, like you say, about the real fundamentals or the ground level developments that we are seeing, changes or dramatic changes to the currency valuation as well as Brent crude prices based indirectly on these events have a direct impact on an economy like South Africa, which has over the last few years become a net importer of various goods and commodities.
Absolutely. And you mentioned the Brent crude price there. I think it's a very good example to focus on. A month ago, exactly, yesterday was a month since the terror attacks in Israel on Saturday, the 7th of October. The markets were closed over that weekend. So tomorrow it will be exactly a month since the markets opened and had a chance to respond to the news from that weekend. And on that morning, the most dramatic move in any indicator was, in fact, the oil price. The oil price was up something like 4% on the open. And people were fearful of the fact that oil prices would run away, the impact of that on inflation and the like. If you fast forward to where we are today, anybody who watches this program, just go and Google the oil price, and you'll see that today's headline has nothing to do with the war. Today's headline has to do with consumption and demand out of China. And in fact, the oil price today is lower than where it was a month ago. And I'm not talking about it's lower than the spike, which happened, straight after the war started. It's lower than before the war. Not much. It's about the same price. It's $1 or $2 lower. But basically, in a month, we've seen some volatility in the oil price. It went up as much as 10%, but it's back down to levels that are lower than before the war. And that ultimately, as I say, counts more.
Yeah, I suppose another important thing to consider here is the direction that the United States and other global economies take when it comes to interest rates and the tone that they share with global markets here. We did see a pause by the Federal Reserve, but it's still a little bit uncertain because of that sticky inflation and the trajectory that is set to take. That always does have a bearing on how the market on the local bourse would move there.
You've hit the nail on the head, and that's ultimately the $1 million question: is exactly when will interest rates peak in the US? When will easing start, and how quickly will they come down? Now, there's a consensus that is developing partly because of the pronouncements by the Fed in every update that we get, essentially on a monthly basis, that we're near peak rates now. That they should be coming down next year. In the last week, the expectation has changed to the dovish side, essentially meaning that a lot of participants are expecting slightly faster rate decline next year than maybe what was anticipated earlier. And ultimately, to cut a long story short, But this is likely to be very good news for most emerging market economies, including South Africa, because when rates in the US come down, the defense of their currency starts weakening, which ultimately means that the dollar starts weakening. And in return, when the dollar weakens, most other currencies gain from it. Currencies get stronger. And if that plays out in the way that I've just explained, it does mean good things, essentially, from a fundamental point of view, not a political sentiment point of view, but from a fundamental point of view. The expectation is that this should be good for the rand over the next 12 to 24 months, which means it's good for inflation coming down, for capital flows, and ultimately for economic growth.
Yeah, I want to focus a little bit on the companies that would be listed on the JSE and how they would be impacted. We did see broad-based losses on the JSE yesterday. Industrials, one of the big losers. And I suppose the story here is MTN. They're coming out with an update, clearing their business in the Middle East, with the latest being Afghanistan. And they've been very unfortunate, Deon, here, is that they've been exposed to markets that are conflict prone. So we had Iran, we've got Afghanistan, and you can see the impact when the trades are happening on the local bourse, that it really does have a weighing on the businesses as well that choose to enter these territories.
Absolutely. I'm no expert anymore on South African companies individually, but the example you mentioned, clearly if a company like MTN, has been operating in those economies, investing in those economies, expecting strong growth, and then something like this happens, it will have an impact. So on a micro basis, on an individual company basis, you clearly have to look out for the specific implications of geopolitical events in the areas where they operate. And the example you've given is a very good one of that. But more holistically, if you look across the board, if you look at the market in general, as I say, the market tends to ignore these events and it focuses on fundamentals more broadly.
Deon, thank you so much for that update. As always, that is Deon Gouws joining us from London this morning, Chief Investment Officer at Credo, speaking about if market participants and investors look closely at the direction that emerging market economies like South Africa's take when it comes to geopolitical events and their stance.